What's up, what's up? Got a special guest here today. We're joined by Mr. Ragnar, my resident dog analyst, who needs a little surgery. Got a little patella issue. It's going to cost $5,000. Pet insurance probably not going to cover it. So I'm going to try and pay for it by selling some Tesla covered calls here, because we got to take care of Mr. Ragnar. He's such a good boy. And his sister's down here too. She might pop up in a second. But let's take a look here at this Tesla covered call I just sold and what I'm thinking here. So here is the Tesla covered call I just sold the other day. Yesterday, actually, which it's working out splendidly so far. Good timing so far. I got $584 in premium, so sold on September 21st yesterday, and that one is going to expire on October 6th, so just about 2 weeks. Now, this is something that I'm doing this in my little mess around account. I've got 100 Tesla shares in there that we'll see what happens. We'll see how long I could make this work. Because if I could do this, 10 more times, there's the $5,000 that it costs for little Ragnar's surgery over here. He's got a little patella issue in the knee. It's got some long, complicated name. If anybody cares, I could look it up after. But yeah, like this video and subscribe and leave me a comment, not for me, but for Ragnar. So yeah, we're going to see how this goes. And, I'll pull up the chart in a second here, do some technical analysis. I'm not really a trader, but I don't know. I'm kind of becoming more of one, I guess. But I'm still like 80% long-term focused. Then I've got maybe 20%. That's what I like to say. Got my little mess around stuff in the short term here. But hey, if we can kind of annualize this, let's say every 2 weeks, if I could bring in $500 in premium, that would be $13,000 at the end of the year if I'm doing the math correctly. Now maybe I take out like 4 weeks of earnings. Ideally, I wouldn't really want to be in these positions around earnings because you just don't know. Tesla reports a phenomenal quarter. The stock can tank 10%. It reports a terrible quarter. It can go up 10% or vice versa. You're probably wondering, what is this thing on my nose? Did I get punched in the face? The answer is no. It is a Breathe Right nasal strip, and I should probably get a sponsorship from them because they're fantastic. They help me breathe. I just ran 5 miles because I'm training for an Ironman, my second one. Okay, let's pull up some technicals here. Let's look at the chart. Oh, Mr. Rags, you are very heavy, my guy. All right, here, let's share the screen. And we'll take a look at the option chain as well in a second here. We'll look at some other options of what I could have done, I suppose. All right, so why isn't it showing the right? Let's see here. Nope, the wrong one. All right, so here we've got the Tesla chart. And if we zoom out a little bit over the last 6 months, what's crack-a-lackin' here? It seems like keeps hitting this 300-ish point, and that seems to be about the peak, and then it kind of bounces back down. But as you can see here, this yellow line, I know there's 50 lines here, it might make you dizzy. Give me a moment, I'll run through the important ones. If you can see that little yellow line there, that's a 50-day moving average, which sits right at around 255, where Tesla currently sits. So as you can see, it's kind of acting as support. Now, if Tesla were to break through that, it could potentially tank all the way back down to maybe here, this 212 mark that we were at, and then the 200-day moving average around 204. But granted, anything can happen here. And then RSI, pretty normal, 44-ish right now. If we go back here, if you look at the RSI, you can kind of get an idea. Back in June, you could see it kind of was at this, 80, 85, maybe even 90 level. Did it get to 90? Overbought. So these are all just data points that you can add in. I don't live and die by them because the thing with these support levels is they're great until they stop working, right? It'll work for a period and then eventually it's not going to work anymore. So it's just one of many data points you can kind of add in of like, if I'm thinking about buying stock, you just put together 10 little data points, and I would say technicals is maybe one of the 10. Alrighty, let's look at some other stuff here. Let's look at the options chain. And then we got this ATR down here, which you can see on a given week. Maybe Tesla tends to move somewhere around $11, $12. So me selling the, what did I sell? The 270. I figured that gave me a little bit of room, maybe a little close, just above that ATR, which figure, an average week, Tesla at most should be moving like $12. So maybe that gets it up to 267. Would give me a little bit of breathing room. Granted, again, I'm going to keep saying anything can happen and this will work until it doesn't. But yeah, like I said, maybe we could do it 10 times and pay for a little doggo surgery here. And if it doesn't work, I sell these Tesla shares at a higher price and I'll probably just turn around and start selling puts. Again, this is just a very, very small part of my position that I just have in this little funsy account here. But who knows? We'll see what can happen here. Let's look at the option chain. So as you can see, I went with the October 6th date here. So the 270, if you were to do this today, it's down a little bit. You can make $480, down 80 cents, $80, 80 cents a share, $80 per contract, 100 shares. There's so many ways you can play this. I was thinking about what did I want to do? Did I want to go weekly? The problem with the weeklies is you really got to manage this stuff, and I don't want to sit here all day doing day trading, not really my cup of tea. And at the end of the day, I think you're taking on more risk because, again, to get that same amount of premium, I would have had to sell, let's say the 260 call would have made me around $500 in premium. So at least this gives me some breathing room. Granted, yeah, there's more time. There's an extra week. And something else I was wondering about was, what does it look like if I wanted to go out monthly, if I wanted to go sell annually? Let's just go about 30 days out and see here. But as you can see, the problem with this is they've gotten earnings on October 17. So again, like I said, this is probably a week I would want to take off just because you never know. It's just not worth it. I like to sleep at night. I don't want to be staring at charts all day, every day. I don't know. Some people are into that, but I try and make this a little more passive and fun. I have been that guy, and it just made me very stressed, and it wasn't fun. So trying to avoid that again. That's why, at the end of the day, if this gets assigned, I'm happy with that, and I think that's something you have to do if you're thinking about selling covered calls. Just assume that when you sell that covered call, those shares are getting called away. So make sure it's at a price you're willing to sell and that you actually want to sell. I have made that mistake in the past with Tesla because it's my baby. I'm so emotionally invested at this point. I don't want to part with my shares. So that's why I made this separate account here to mess around with the 100 shares. All right, enough of that. So if we went out a month here, as you can see, all right, now I could go up to a 280 strike, and I could get $650 of premium. I could go up to a 300 strike. I could still get, around $300 of premium. So this is all stuff you just have to decide at the end of the day. As you can see here, wow, we got a lot of open interest, a lot of volume at that. That's a popular strike there, 300. Then we just have to figure out, are these calls people are buying or are they selling them? Which there are ways of doing that. I'm subscribed to a couple services that will, differentiate that out, which I'll have to take a look at, maybe make another video on that. But the other option, we go even further. Let's just say we go to January, 4 months out, maybe you think the economy ain't looking so good and the stock market does not equal the economy, but maybe you think the stock market had its run and maybe we're going to go sideways or even down here. So if we go out to January, 120 days, 4 months, well, the premiums get pretty nuts. I mean, again, so that 270 I sold would net you, $2,365. If I was going to go this far out, I would definitely play it even more conservatively. 300 here would pay you $1,380 in premium. But Tesla's crazy, man. It does crazy stuff. I mean, it could make this 20% move like nothing, and then that's where you kind of get in some hot water. But again, if you're content, selling at 300, I mean, it's not a bad deal. When you factor in the premium, you're essentially selling Tesla at $313.80 would kind of be your take home there. So the risk is you miss out on further upside, but again, maybe you got in at 100 or 150 when it tanked, and you're happy making 100% gain in a year. I can't really complain with that. But I guess if we were to annualize this 300, so figure over 4 months, this is netting me 1,400, about 450. Nope, $350 in premium if I were to look at it monthly. So again, that's where I go back to that contract I sold. While it's at a lower price, I'm making more money. And if I just do that monthly, I actually end up making more money than this. Now, granted, again, depending how you want to look at the strike price versus the amount of time, this could be a more conservative option because your worst case is you're selling at 300, whereas my worst case, potentially, I may sell at 270 if it really goes against me and I can't get out of it. I can't roll it out and up. Oh my goodness, Mr. Ragnar is so heavy. Oh my goodness, he's such a good boy, though. Look at the camera, Mr. Rags. Don't do it for me. Like this video for Rags. All right. You wanna go down, or are you comfy? All right. He's chilling for a little bit. Now, where it gets real nutty, I just like to torture myself and look at these premiums. Let's say we were to go out a year. Wow, almost to the day. 364 days would be September 20, 2024. This will be the last one. I'll wrap this up. I don't know if you guys are interested, but I find this interesting. Fun little exercise. That same $300 strike now pays you $4,000 in premium. So again, it's $39.75 per share. So you multiply that by 100 because we're dealing with contract is for 100 shares here. All right, that sounds really good. But again, when you annualize that, divide by 12, you're talking like, my brain is broken today. You're looking at 300 and some change maybe on a monthly basis if you want to divide it by 12. But if I'm going to go out a year, I don't know that I'd ever want to go this far out with Tesla. It's just too crazy. You just don't know. The stock could double in a year. It could go down 50% again. You just don't know. And I'm in it for the long term. And you're probably wondering then why are you selling covered calls? We'll see. Again, this is my mess around account and we'll see what happens. This may end up being a one-time thing. But, if I was going to go this far out, I would play it super conservative, maybe like the 500 strike, which is a double from where we are right now. But you make less than $1,000. But, you can make the argument that that's like more passive. Like this has to really go really against you for you to be in jeopardy of losing your shares. But again, you just never know. As every time you sell a covered call, just assume you're losing those shares. Let's see. Anything else I want to look at here? Tesla below the 8 and 10 day moving average. That's those red and blue lines at the top here, which tends to mean weakness. As you can see here, if we go back to August, once it broke below the 8 and 10 day, basically right here, it ended up just going down, 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 down. And then eventually the trend changes again, kind of bottomed out 215 or so. But right now, based on the technicals alone, we're looking at some weakness. Again, this could change any day on a dime. That's the thing with technical analysis. It works until it doesn't. Tomorrow, Elon Musk comes out and says, we have solved FSD and we're bringing out the Cybertruck and Tesla could go up 20%. You just don't know, folks. But this is what the charts are saying. So we'll see how this goes. And maybe I'll make another video in 2 weeks on covered calls. And you guys can see how that worked out. And if I'm going to do another one, we will see. If you enjoyed this, like, subscribe, leave me a comment. Don't do it for me. Do it for Mr. Ragnar. He's such a good boy. Yes, he is. He needs to have surgery on his knee. And hopefully he'll be okay. Pet insurance doesn't want to cover it. So I got to sell covered calls to pay for it. All right, guys. I'll see you on the next one. Check out my last video with Randy Kirk, expert on Tesla, business, manufacturing. My guy has done it all. We had a fantastic talk. I'll link to that video or you could just find it here or something. All right, guys. See you on the next one.